You've probably heard the term agentic AI thrown around a lot, right? This idea of super smart systems just running on their own. But what happens when that Silicon Valley dream crashes into the hard reality of a world built on human accountability? A world like accounting. Well, that's exactly the collision we're going to unpack today. So, this whole explainer actually got started because of one really sharp question I heard at an accounting conference. Everybody was buzzing about AI for things like reconciliations, and someone in the audience just cut right to the chase and asked what everyone was thinking. How far does this autonomy thing really go? And the speaker's answer? It was instant. He just said, "That's not my agents." Now, it seemed like a simple clarification at the time, but that one little phrase, it opened up a much, much bigger conversation. A conversation about a distinction that is absolutely critical in the world of finance. It's easy to just say no, right? But the reason for that no is what we really need to dig into. It forces us to stop and ask what responsible AI actually looks like in a high-stakes field like accounting. So let's really break down the full answer. All right, so first things first, we need to get on the same page about what people even mean when they say agentic AI. Because in the tech world, it describes a very specific and, let me tell you, a very ambitious goal. Here's the absolute key. The whole point is total, hands-off autonomy. Agentic AI is engineered to observe a situation, make a decision, take an action, and then do it all over again, completely on its own. No human approval necessary. The entire idea is to create a system that just works without us. And it's all about this continuous loop, right? The agent sees something, makes a call, does something, and then learns from it for the next time, over and over again. The entire model is built to achieve one thing, taking the human right out of the loop. And look, in a lot of fields, that's a fantastic goal. But here's the thing. Accounting, it's just different. It's not just another business workflow you can automate and forget about. It plays by a totally different set of rules, with way higher stakes, and that changes everything. I mean, just look at the difference. On one side, you've got stuff like optimizing your supply chain or adjusting prices. That's mostly an internal business thing. But accounting? That's a whole other ballgame. We're talking about legal attestations, financial certifications, you're validating controls under rules like Sarbanes-Oxley. This isn't just about being efficient. This is about the law. And at the end of the day, that accountability always comes down to a person, a real human being. The CFO puts their name on the line, the controller signs off, management signs those rep letters. There's always a person who is legally and professionally on the hook for those numbers. And that's the absolute bottom line, isn't it? I don't care how brilliant your algorithm is, it cannot sign its name on a legal document. It can't answer to the SEC or the PCAOB. By law, that responsibility falls on a human. Okay, so if the AI can't take the legal heat, what should it be doing? Well, to figure that out, we have to talk about this one concept, this thing that's at the heart of all accounting, but somehow it gets completely forgotten in all the AI hype. It really is the missing piece of the puzzle. So what are they missing? It's the proof. It's all about the proof. Everyone's so focused on the final number. But in accounting, that number means absolutely nothing without the evidence and the trail to back it up. And that evidence has a specific name. Workpapers. Seriously, this is the bedrock of the whole profession. It's not just some byproduct of the work, it is the work. It's the structured, documented, auditable trail that proves exactly how you got to every single number. And listen, a work paper is not just a spreadsheet. It's the whole story. It's the complete package. It lays out exactly what you did, the reconciliations you ran, the source evidence you used, and, this is so important, the documented proof of who reviewed it and who signed off on it. And who needs that story? Oh, just about everyone who matters. Your external auditors, they live and breathe this stuff. Regulators? Absolutely. Tax authorities like the IRS here in the US or the CRA up in Canada? You bet. Work papers are completely non-negotiable. Let me put it this way. If an auditor questions one of your numbers, you can't just shrug and say, the AI did it. That is not a defense. You have to produce the work paper, the document showing the evidence, the procedure, and the human sign-off. The proof is in the documentation, period. Okay, so this is where we get to the right way to do this. A responsible model where AI does the heavy lifting and humans do what only humans can do, use their judgment, and take full accountability. So here's what that looks like in practice. The AI grabs the data, it does all the grunt work of reconciling, it even drafts the schedules and documentation. It builds this beautiful, complete, structured work paper, and then, and this is the most important part, it stops. It just stops. It doesn't act on its own. It presents its findings for a human to review. See, the AI's work isn't the finish line. Nope, it's the starting pistol for the accountant. That's when the human comes in, reviews everything, applies their professional judgment, and puts their name on it with a documented, auditable sign-off. The human is always in the loop. Because at the end of the day, it all boils down to one simple truth. You cannot delegate professional judgment. You just can't. Some things, especially when it comes to risk and interpretation, have to stay with a human. So think of it like a partnership. The division of labor is crystal clear. Let the AI do what it's amazing at, crunching huge amounts of data, spotting patterns, creating the first draft. That frees up the humans to do the irreplaceable stuff, be accountable, make those tough judgment calls on risk, and provide that final, legally binding sign-off. They're partners, not competitors. And that's exactly why this idea of full autonomy in a field like accounting isn't innovation. It's not progress. It's actually a breakdown in internal control. You're creating the very problem that the entire system is designed to prevent. So the real innovation, the real game changer for AI in accounting, it's right here. It's about building systems that create rock-solid, defensible work papers. It's about using technology to make our internal controls stronger, not weaker. It's about preserving human accountability and making our professional judgment even better. So as you start thinking about AI in your own world, you've got to ask yourself this one simple question. Is the system you're building designed to create a clear, auditable trail of proof? Or in its hunt for autonomy, is it creating a black box that's going to become a massive control problem down the road? Because that distinction, well, it makes all the difference.